Hi, this is Joseph DiVirgilio. This time I come to you from a boat in Croatia. In my first video, we discussed environmental, social, and governance, which is the practice of identifying risks that are not identifiable through traditional fundamental analysis. But this time I want to focus on the environment. I am stunned by the ecosystem of this country, which is inspiring me to discuss my expertise in sustainable finance with you. If you take a good look around me, you will soon realize that while there are many elements of human influence, like this boat or building structures in the distance, this is the way nature was meant to be. And those who insist that we must save the planet have yet to realize that it is us that we need to save. The planet will still be here as it has been for the past 4.5 billion years. You don't have to travel to Europe to appreciate the delicate balance of our ecosystem. If you do not live in a big city, just look outside your window. Since my very early days on Wall Street, I've been passionate about sustainable finance. When I first came to the United States from Italy, I noticed because of cheap energy, some serious inequities in the American way of life. I'll just give you a small example. My very first car in Italy was a Fiat Uno with a 20-mile per quarter of a gallon consumption. In the United States, a car with 5 times the engine size consumed 4 times more than my car in Italy. If we consider that by definition commodities are finite, it doesn't take a genius to understand that even with technological advancements in oil exploration, that oil and its derivatives will go higher in price. And this, of course, will make the sale of American cars completely unsustainable. As we speak, we are terraforming this planet, and soon it will not support life as we know it. It makes no sense whatsoever to debate whether the CO2 emissions are man-made or whether it's a natural cycle of the Earth. Even less so to make it a political statement, because we all should aspire to a cleaner and healthier environment. One thing is for sure, something serious is happening. The floods we saw in Germany last week, killing hundreds of people, in the Netherlands, in Belgium, Anchorage, Alaska recorded 80-degree weather, Moscow 86 just last week. Something is really happening and we must pay attention. And those who think that climate change is a hoax should be incentivized to do something about it for their own children, for their own grandchildren. At least they can say they tried. When the UN set up the Principles for Responsible Investing back in 2004-2005, they laid out the ground for asset managers around the world to start fostering businesses that were working towards ESG goals that affect our life every day, including in the workplace. While ESG has its flaws, it is a stepping stone for more long-term sustainable development goals, 17 of them outlined by the United Nations, which deal at a country level. Countries need to take these into consideration moving forward. The millennial and ensuing generations are big advocates of these goals and ESG, and they're putting the money where their mouth is. Those companies that decide to delay or ignore reaching these goals will miss out on trillions of dollars of investments. And ESG is doing just that, forcing companies to take action fast. When I say ESG has its flaws, it's because companies tend to embellish or say white lies on their corporate sustainability report, which is a document that is issued by the company once a year, utilized by ESG rating companies to assess the ESG score of a company. ESG rating companies use 350, even more, data points to assess a company's ESG score. A lot of these can be misleading, and an investor can be fooled unless he knows what to look for. In my next video, I will be outlining some trends that are worthy of our attention, because while Amazon, Google, or TD Bank have decent ESG scores, they really have a minimal impact on our way of life. Stay tuned for my next video, and I will teach you all about it.